Hello YouTube, Tim Erickson here, back for another update video on my Robinhood challenge. For those who are new to the channel, I started with $10,000 invested in Robinhood a little over 2 months ago at this point. Our goal is to turn it into $100,000 as quickly as we can. We are investing in some dividend growth stocks as well as trading options to get there. I have several other videos where I break down those trades in more detail, and I'll definitely plan on doing some others in the future also. But for now, the purpose of these update videos are going to be to just update you on the trades that were made over the week, or in this case, the last 2 weeks. The last video I posted was the update after week 7. We've now finished weeks 8 and 9, and unfortunately I was sick there for most of the week, and so I didn't find the time to come record a video, but wanted to update you on what happened over those time frames. Now, if I click on my 1 month chart here, I'll actually show you. So our week 8 ran from May 7th, where we started with just about 13,100, through May 14th, where we ended at 12,900 and change. So we actually had our first down week in the whole challenge, was week 8. We were down about $200. We also, during that time frame, had our first realized loss on an option trade, and I'll get into that in more detail in a minute. But even though some of our other options may be down a little bit in money, until they're closed or exercised, those losses aren't realized. And we had our first realized loss. Every other option that we have either closed or has expired on us has been a profitable one. So I will talk about that in more detail in just a second, but I will point out that week 9 was a very spectacular week, following up the slightly down week of week 8. Week 9, we went from, I guess I'll just click here, the last week, we started at 12,900 up to 14,000. So first time we broke 14,000 this challenge, we are at a new all-time high. And again, only 9 weeks into the challenge, a little over 2 months, we're doing pretty well. So to get into what happened over that time, let me just come into my notifications so I can show you guys those trades. So if we scroll down, you'll see, I guess, the first trade notification here. I opened a put credit spread on Facebook stock. I received $104 credit when I opened, and if I come back to my positions, you can see here, this is the trade I made. I did Facebook with a August 20th expiration, so this is 3 months away from expiration, so a little bit longer than I normally like, but we are pretty far out of the money too. We're $46 out of the money right now. Wasn't quite that far out of the money when we opened it. As you can see, we are up on the stock right now a little bit, so we received $104. They're saying it's only worth $68 right now. And again, for those new to the channel, this is what we actually want, is for these options to go to 0, right? Because I'm being paid when they're opened, which means I could be assigned to purchase the stock if the stock drops, and they could force sell to me at a higher price. But my hope is that the stock stays above the higher of my 2 strike prices here. So you see here my prices are $270 and $265. So as long as Facebook stock stays above $270 by August 20th, these options expire worthless. Now, in reality, because this is still 3 months till expiration, this is one that I'd say we have a pretty high likelihood of not carrying all the way till expiration. If the stock price keeps moving up, this market value is going to keep getting closer and closer to 0, and as that happens, I may look to close the position so I can release the collateral, because as I said, I was paid $104 to open this position, but they're actually holding $500 collateral, because if I were to be assigned to buy the stock at $270, that would be for 100 shares each at a price of $270, which would be $27,000, and since I don't have that much cash available, I bought the $265 put, so I have the right to assign them away at $265 also. So if the stock price were to absolutely tank, even though I'd be forced to buy them at $270, I could sell them at $265, which is only a $5 loss per share, times 100 shares, that's the 500 collateral. So again, because this is still 3 months from expiration, assuming Facebook continues to either hold near its current price or increase, that's definitely one we'll be looking to close early and release that collateral early and go position somewhere else. But that was one of the trades we made. You'll see here, if I come back to my notifications, we did receive a dividend from owning AbbVie. We got $22.10 there. And then if I come into my SPY notifications, These are the ones where I incurred my first loss. So you'll see here. Now, during this week, there was 3 really bad days in a row where the market was just down huge. People were getting killed. I mentioned my account was down a little bit. We only ended the week down $200. It did drop closer down to 12,000 at some point, so a little over 1,000 off its peak, but nothing catastrophic for me. But I did have these 5 SPY contracts that were $1 spreads. That was my max loss potential. They ended up falling way deep into the money, so there would have been a good chance I could have been assigned had I held them, but I elected to close them early. I paid 40 cents per unit, which again times 100 shares means it's actually $40 per contract. I had 5 contracts, so it cost me $200 to close this position that I think I only received like a $30 credit when I opened. So overall that was a $170 loss, which was pretty bad. I did then that same week open these puts, 4 contracts at $9 each, so I got $36 back, and they did expire worthless. So all in all, lost about $134 on that trade, which is our first realized loss of the challenge. Now, that did happen again on our S&P 500 ETF, known as SPY. Those are ones that I was trying to do very short term to take advantage of the time decay as quickly as possible, getting the options expired and just reusing that collateral very quickly. That was a newer strategy for me also, as I was experimenting with for you guys, and I think it's one that I will still look at in the future, but that loss did kind of sting, so I'm going to probably do it more opportunistically instead of trying to force it every week. The market had been up so much that it was bound for correction eventually. So for me personally, I think I'll probably only continue to look at SPY after there has been some kind of a big correction where I can get higher premiums for safer contracts and go from there. But I do continue to just employ this strategy on the other stock positions as I have been, which tend to be for contracts that are 1 to 3 months from expiration. The shorter the better, obviously, but sometimes the shorter ones are either the credit isn't very good as far as a percentage of my collateral required, and or it might be too close to the money to make me comfortable. So that's why I sometimes look longer out. You'll see here we don't even have many options left expiring in let alone May, none in May, and only a couple in June. So we have had to start to look further out into July to get kind of the credits and the margin of safety that I'm looking for. But I will note that some of our ones that were expiring, we ended up closing early so we could reposition and open new ones. You'll see on Amazon I now have 2 contracts, or no, sorry, I have 1 contract here on Amazon. I received $100. It says it's currently minus 122, so I am down slightly on this position currently. I am still $150 out of the money, and this one expires July 2nd, which is a little over a month away, called a month and 10 days or so. So hopefully that one doesn't come back to haunt me, but we'll see. And then this was one I was thinking of, where I have 2 contracts on Amazon. Don't expire until July 16th, so a little less than 2 months. I have received an average credit of $1.10, currently worth $1.15, so down $5 on them, but they're pretty new and still pretty far from expiration. These ones, similar prices, 30.60 is the higher price here, and a little bit longer until they expire, but those are some of the newer option positions there. You'll see I also added to some of my Viacom positions where I think like this expiration date in September, I had a few contracts. I upped it to 10, and the same went for, I believe, this June one, and maybe even this June one. I forget exactly which ones I added up to 10, but I just added, I had 5 to 7 contracts on some of them, and so I added a few more. And then I also opened these Viacom puts that expired July 2nd also, so again, about a month and 10 days away. I received credit of 30 cents when I opened these, which is much higher than I am used to getting as far as a percent of my collateral. So the way and for those new to my channel, the way I like to evaluate these option trades, I do look at how much collateral is required for the trade and what percent of that am I getting as a credit as one of the things I consider before I open a position. Now, just because it offers a high percentage of your collateral as credit doesn't mean it's a good trade, right? That probably means it's getting riskier. But I like to get a pretty healthy chunk. I prefer to be in the 15 to 20% range on most contracts. Sometimes for ones longer out, I try and get closer to the 25 to 30. This one was a really nice one where it was both a pretty short expiration, only a little over a month away, and I still got a 30% credit for my collateral. So I got $1 per share collateral, and I got 30 cents credit per share. So I opened 10 of them, so that means they are holding $1,000 collateral for this position, but they paid me $300 to open it. So the max potential loss on this trade would be $700, the 1,000 collateral minus my credit received. But again, this is one where if I thought it was at risk of being a total loss close to the expiration date, I would probably just go ahead and pay to close early for a smaller than max loss, like I did with that one that I showed earlier on SPY where I did take a loss. So theoretically, the max loss is 700. In practice, if you follow your accounts closely, you can usually get out of them for much cheaper if you need to. So I really was happy with this trade. Obviously, when I opened it, Viacom was not nearly as high a price as it is now, as it has run up recently. You see here I opened it on May 17th. So just because I'm curious, I'm going to go back to Viacom's calendar and show you what was the price like on May 17th. So let's find it. Here we are. Yeah, May 17th we were a little over $38 a share. Certainly below 39. So those were at strike prices of 36 and 35. So still $2.50 out of the money, but Viacom had obviously fallen significantly from its peak at the end of April and was kind of down in the gutter. It has encountered resistance down at that $38-ish level previously, and so me going still all the way down to 36, I felt like was a pretty good margin of safety. And obviously Viacom's gone nothing but up in the couple of days since then, which is why the price on those puts is now already significantly diminished. It says I've already made almost half the potential profit there. So those are basically a summary of the options trades that I made. You'll see here as far as stocks go, I did add to my Viacom position, again, when the stock was trading as cheaply as it was. I came in and bought a few more shares here. So you see here I bought 3 shares at that low price on the 17th for $38.60, which brought me up to 45 shares total. Also on the 17th I bought 2 more shares at 39. So total of 5 shares purchased that day, bringing me up to 45 shares of Viacom. My average cost on those is just under $39. Obviously, with it running up recently, I'm showing a nice profit on this stock. When it was down, I did have a small loss on it here when it was below my average cost, but looking pretty good where it sits right now. And then I also bought 10 more shares of AGNC. So for those who remember way back to my first video on the challenge where I talked about the stocks that I bought, that's probably the last time I actually talked about this one. This isn't one I've been talking about frequently. If you'll recall, if you watched that video, that I mentioned I was mostly purchasing the stock for the yield, as it is a very high yielding stock and it does pay dividends monthly, which is also pretty nice. I think its yield today is a little under 8%, which is much lower than the historical yield for this stock and for other stocks in this category, right? This is known as a mortgage REIT. So essentially they borrow money at really low interest rates for short term and invest in mortgage-backed securities that pay higher interest, and the difference they make on that is basically how they make their income. But they're mostly seen as a pass-through vehicle for income, and my average cost on this, as you'll see, was almost $2 a share less than it is now. So we're performing very well, both already in terms of the stock price appreciating, but also in terms of dividends received from them, because again, I've already received 2 dividend payments of $9.36. So I elected to buy 10 more shares, and the reason I did that is because, again, the yield I think is pretty good, and I think there are a lot of people speculating that this is a stock that might actually increase their dividend sometime this year. Obviously, that's not a guarantee, so don't go out and buy the stock just based on that recommendation from me, because that's not what I'm saying. I'm just saying a lot of other people seem to think it's going to happen. They do generate far more cash than they are paying out in dividends, so they definitely have the means to do it. And historically speaking, they do tend to pay out a higher percentage of their income than they have been over the last several months. So that's just wanted to capitalize on the potential for a dividend increase here, which is why I added to this position. And we'll see if it happens or not. But that basically sums up all the changes in trades over that time frame. I will mention here, it says I have 2,100 buying power. That's because I had some more options expire worthless on Friday. So now currently only have $6,500 collateral right now. I will probably look for something to open up with this collateral next week. Now it says $2,000 buying power. Remember, for options, because this is margin, they'll actually only allow half of this, so I'll be able to use $1,000 margin collateral on this buying power. But you will also notice that the other thing, besides those few shares that I mentioned I purchased, I actually now have a small cash balance of $108, whereas before I was carrying a small margin balance in the around $200 range, just because I was opportunistically buying Viacom when it was beat down. As the stock price ran up, obviously I haven't been comfortable enough to buy that on margin anymore, and I've since paid back all that margin with some credits from these options that I've been opening, and actually have a small cash balance. So I am going to be deciding what to do with both this cash as well as the cash I'm going to receive from the new options I open shortly. But more than likely, I'll probably just add to one of my existing positions. I may look at maybe opening something else also, but for the time being, I am pretty content just continue to add to the positions that I have. So that's it for the updates on the trades. Let's go ahead and look at my account summary just so you can kind of see how all our stocks are performing. Showing profits in all of them right now, and almost at least $100 profit in every position, which is looking pretty good. These two down here at just 90. A few others a little bit over 100, and then coming up here are AbbVie, Oracle, and CVS are just really performing well. CVS in particular went on a tear over the last couple of weeks and was up a whole ton. You'll see my average cost is $74.57, and it's up to almost $90 a share right now. So doing really well on that, and overall in the challenge. I am going to release a second video this week, I promise, because this video is already getting long, and I've dedicated so much time to just the trades on what went down this week. I'm going to do another video that's more of a 2-month summary recap for the challenge overall. So look for that to come out this week as well. And as always, if you enjoyed the video and the challenge, please consider leaving a like and subscribe to the channel. Leave a comment below if you have any questions, or if there's stock you want me to look at and give my opinion on, or whatever. So I'm really interested to hear how you guys are doing, if you've been trying out trading these put credit spreads as I have been. But very pleased with how we're doing so far. In 2 months, we're up 40%. If we keep that up, you guys will be shocked at how quickly this 14K turns into a very, very significant sum of money. So again, this is Tim Erickson. Thanks for tuning in. I look forward to catching up with you guys next time.